Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 29th COT report of this year. And as usual, we're going to start off with the changes in commercials positions. Here we go. You can see the Australian dollar on top of a list with a 26% change in commercials positions, 26 in large speculators, and we've got a 22% change in small speculators. These changes are of course larger than average. They are bearish, and they're coming at a point in time when prices are actually near their highs. So this signal may actually be effective. You can see the one earlier came a little bit late, and the one before that was also a little bit late. But this time we have this signal when prices are at their highs. But opening a 5-year chart, you can see a little bit wider perspective about the market, and you can see we've reached a bearish extreme that of course can continue to even greater extremes. You may see that on this 5-year chart. Nevertheless, you can see that this size of extreme is already capable of stopping a rally, and I'm just showing you an example back from 2016, and again from 2016 you may see how well these bearish extremes stopped the rally. Of course, caution is advised, since as you may see we have breached these resistance levels. Prices have gone higher, technically speaking, so you have to do your more in-depth analysis and see whether or not this bearish extreme and the bearish COT change signal is enough for you to go in a short position. So basically you may see that this extreme can widen to even greater levels. That's a risk if you think this is it. So go and have a look at that in a more in-depth analysis. Let's move on and have a look at lumber market, where we have a 22% change in commercials positions. You can see that change size over here. This is a bearish one. Large speculators are again net long, as you may see, and small speculators change their positions pretty dramatically, 36%. So this is of course bearish, but jumping to the 5-year chart, you may see how extreme this market is, and we can state that there's not a significant extreme to talk about right now. It's not an obvious situation. We're more or less in between the two extremes, the bullish and the bearish one. So I would say it's advisable to jump over to other markets where there might be more clearer pictures. Feeder cattle is our next market with a 13% change in commercials positions. 10% can be visible in large speculators, a bit larger than average, but nothing too unusual. This of course is a bearish change signal, possibly pushing prices lower in the next couple of days. But already we can see this all-time signal over there in commercials, which is significant. So this is an all-time COT extreme in commercials positions. It's a bearish COT extreme, and it tells us that prices may not continue any higher from here. Of course, this all-time extreme may be present in the market for a couple more weeks or even month before we actually reach a point where prices go down, but nevertheless it's a significant extreme, and I think you should keep your eyes on this market. Let's move on and have a look at large speculator COT extreme. We've got the New Zealand dollar on top of our list and cocoa with all-time COT extremes. Let's start with the New Zealand dollar. Jumping to the 5-year chart. Here we go. So of course we talked about the New Zealand dollar in the past few weeks. This extreme was already there, visible, and so we had to talk about it. And as you can see, prices are still going higher, and they're breaching these resistance levels, which is a warning sign, and of course tells us that maybe this rally continues for a bit more time. The stress level is definitely at an all-time extreme. We've never seen traders holding such huge positions, commercials being net short that much, and large speculators being net long. So even if this rally continues, I think caution is advised, and you should be prepared for a possible end of this rally. Moving on to the cocoa market. All-time extreme over there also, both in commercials and large speculators. in this case, we are talking about a bullish COT Extreme. Of course, it's pretty obvious, and you can see that prices have already gone higher. So we've left these levels at 1800 over here, and we're moving higher. So I think it's important to state that this bullish extreme that we are witnessing right now in cocoa market is something we've never seen in the past. So it's definitely pushing prices higher. Yeah, that's that. And let's move on to our last market for the review, which is the Euro market with a 323 report extreme. So we've got a pretty decent rally over here, and as you may see, I'm just pointing this to you, we are exactly at a significant resistance point. We have a bearish COT extreme situation, of course, not surprisingly. Also, small speculators, actually they are at their most from the three categories, large speculators, commercials, and small speculators are at their most extreme with 519 report extreme over there. So I'm not saying that this is going to push prices back down next week. This, as I stated in the New Zealand dollar analysis, this can continue, but it's a warning sign that stress levels have built up to levels that we've never, or at least in the euro we have seen previously, but they're definitely close to their all-time highs. Okay, that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.